Ira Epstein, and here we are with your financial market wrap up. And this wrap up is for the evening of Monday, December 8th, 2025. And the time right now, we're pushing about 6:20 p.m. Central Time. So as we look at the market, you can see you've got a mixed picture tonight as you're opening early. Some of the stock indices were down today, and you'd expect that. This is the evening up period where people trim positions, put on positions, try to figure out how do they want to position themselves going into the two-day FOMC meeting that begins tomorrow. And with that, let's take a look at what we do get tomorrow. You get the National Federation of Business, the Small Business Optimism Index, and that comes out at 5 in the morning. Then we get Redbook Weekly Retail Sales for December 6th, and that comes out at 7:55. They were a powerhouse number last week. Then a number that the market will pay a lot of attention to is the JOLTS number, job openings and labor turnover. We want to see, does this give the Fed reason to say, no, we don't need a rate, or yes, we do need a cut? Which way does it go? The API numbers for the oil stockpiles, that'll come out at 3:30. And as I said, the Federal Reserve begins its two-day meeting starting tomorrow. So this is going to be important. In the metal markets, we backed off a little bit today, and now we're getting a bit of a bid tonight. The dollar was slightly higher as a number of currencies are just all over the board trying to figure out how they position themselves in front of this at this point. And energy markets did get hit today, and it was fascinating because I was looking for news. Why were they breaking down? I couldn't find a darn thing to work with. When we look at the mini S&P 500 index and the close, I've got it in green because the market's been green. I mean, this is a bullish year. How else would you call it? Take a look. The year started, back over here. Follow me and look at how the market is done. You had one break early on. Now, could we get a break early on in January of this year? Yeah. What's lurking out there that can hurt this market? Another government shutdown. Have you heard any word that the Senate, the House of Representatives, and the President, they're meeting to solve what's going to happen at the end of January? In other words, getting a budget? I have not. You might have a better way of doing that than I do, but I've heard not one word on it, and that scares me. When we take a look at the chart action, you can see how the market has come back up, and notice how the market is fighting again right at these levels. So that's your battle zone in the market. You've bounced nicely. You've turned the trend back up with higher lows, higher highs. You break that uptrend if the market takes out 68, 12, 25. If it breaks down, then possibly the 67.70 level becomes the next support zone. If the market rallies from here without breaking through that, the Bollinger Band at 69.65 becomes a key number. I didn't mean to do that. I'm sorry. I'm working on this computer a little differently. And remember, the last high that we had was 69.55. So that would really take this market up quite a bit. In other words, new highs. And I do expect that. So I'm in the camp that thinks Santa Claus rally will happen. I'm going to warn you, you want to be fleet of foot because I don't trust that our government will not put us back into the situation where we're back into another government shutdown phase, and that is not bullish the market. And that's why I'm concerned that at the beginning of the year, if you get that rally from Santa, you could give it back in fast order. As we're looking at the NASDAQ, here's what I'm focused on. Are we going to embed? Not there. So day 1, 2, and today could be the third day. If you embed, I get very friendly these markets, and then I want to start you coming in on the long side of them. Is it smart to go into the Fed meeting? Well, that's up to you. You know, the probability this morning when I looked at the CME Fed Watch page was 89.9% that there would be a cut. The probability of Kevin Hesed winning, it was yesterday 78% in a number of the polls. So we'll see. And he's obviously, in my mind, President Trump's man. He wants to continue to cut rates. The question is the members on the Fed, not everybody will be beholden. There's a number of people that have broken with Fed Chair Powell, and they will most certainly break with Kevin Hesed if they're saying we don't need any more cuts. When you take a look here at what's happening in the Russell, this to me is the strongest of the indices. It has the embedded reading. It's trying to break down a little bit, but until that red line closes under 79, this is the one that will look at it and say, okay, you're wrong if the Fed doesn't cut interest rates. And you're right if it does, because the short-term effect of a Fed that is aggressive on cutting rates helps this particular index quite a bit because of the type of companies that make it up. In the DAX, you can see the market stalling a little bit, as I mentioned it would last week. I thought it would, at least. That doesn't mean I'm always right. I'm not. But in looking at it, I figured that the 100-day average was going to give you trouble, and it most certainly did. Now I think the 10-year note has gotten cheap enough with today's action that it doesn't have to go down any further. That's why I switched from the 30 to the 10 on this week. I wanted to show you that. You got down to the Bollinger Band. Staying under a Bollinger Band only happens 5% of the time, or above it 5% of the time. It does do it. Don't get me wrong. You'll see that from time to time. But as I said, if you go back and you study your charts, you'll understand what I'm saying. And the 2-year notes hit the Bollinger Band. So I think that we've seen where the rates have gone up. That's not down. That means interest rates have climbed going into the report. And I think that now the market wants to take back some of that. That climb in the rate has helped the dollar to rally a little bit. And you can see that maybe it's in a position to get back to the 18-day average of closes, and that's 99.11, let's call it, and round it up. In the eurocurrency, the market has been backing off, as it should. It hit the Bollinger Band, coming back down. It's very overbought, so that does pose a problem for it. In the Japanese yen, the question is, what happens in the economy? Obviously, Japan wants, you heard the word wants, I put it in quotes, inflation. They have fought to get inflation back for decades, and now they're getting it, which is good. The central bank wants to hike interest rates, and the battle is between the prime minister and them, because she most likely wants the economy to keep with a lower yen to spur business on, create more inflation. And that's what they need there. In the Bitcoin arena, we've rallied back to and are fighting a battle at the 18-day average of closes for direction. The market rode the Bollinger Band with what we call that gorilla glue trade, and when the bearish embedded slow stochastic was lost, and it wasn't lost here, it was lost the next day, right here. Watch this. There you go. When you lose it, the odds are the market's going back to the 18-day average to fight a battle before it goes under the most recent low. It's all taught in my enhanced Bollinger Band course at iraepstein.com under the word courses, of course. Isn't that interesting? Courses, of course. All right, higher lows, higher highs, and you can see the last break low was 62.17, and today you didn't quite get down there. You're approaching it, but you're not there. So it's a pullback of a market that's had a rally. It was able to get over for 48 hours the 18-day average, but again, it rallied up to it, and it's fighting a battle right there. And the same pretty much thing is going on in WTI crude. The slow stochastics are not embedded, and they're not overbought. You have a market that's basically still in an uptrend until you step back and take out these lows, but it is acting weaker than it is stronger by it being under the 18-day average. In the heating oil, you would think you'd get more of a bid in this market, is if you're watching national news and you're looking at the weather that's moving through America, it is not frigid, it is freezing. And we are in for more Arctic blasts. We've had in December in the Chicago area as much snow as sometimes you get in a year. It's really been heavy. I moved into Indiana over my recent move, and I'm in the snow belt, and it's absolutely stunningly gorgeous. In natural gas, the market has pulled back to the support zone. The combination here of the 200-day average and the 18. So this is the battleground as I see it. Now, keep in the back of your mind that if you'd like to get any of our free offerings, just move your cursor up here. You'll see If you do that, you can get to the website. You can also get more if you're watching me on YouTube by clicking up in this area or just going to iraepstein.com. It's an easy way to do it. I'm Ira. You have yourself a great evening. I'll talk to you all at the other updates tonight. And of course, first thing in the morning flash update.